Archie.
So there was a lot of conjecture in the last cycle about what's driving the Bitcoin price.
Yeah.
And I think it's kind of diminished now, but there was a strong consensus around last cycle, around 2020, 21, that it was the Bitcoin halvings that were driving the Bitcoin's price cycle, the bull and bear. And that I guess once the peak of the bull market hit, we started seeing different analysis that was mapped to the money supply. And it was the first time I'd seen that discussed in Bitcoin, that actually it wasn't the halvings driving the price. It was the money supply. Well, at least it mapped really accurately to the Bitcoin price cycles in a way that I guess we had the first inkling that the halvings were not perfectly mapped to the Bitcoin price cycles, was how much later and later the bull markets became.
Yeah.
And so later or earlier? This time around it was later because we're quite a while. But I think last time we were a bit early, weren't we?
We were.
Yeah. So like how did you ever buy into that? Because famously that was the theory behind the stock to flow model.
Right.
And I'm not sure if Plan B still supports that and holds that view. But we've seen a lot more openness in the Bitcoin space about other things driving the price, in particular money supply and business cycle, both of which seem to be concurrently on the upswing. How do you see that?
Good question. I've actually tracked both since 2018. So I started the power curve research in 2018. You can find it on Twitter. It's like the last day of the year, December 2018. And mid-2018, I was posting about how Bitcoin represents base money. I'm going to start tracking the base money supply. I've had more courage, or not courage, but I guess
conviction.
Yeah, conviction is a better word. That it's the former. It's the power curve that drives most of the growth now. It kind of goes back to your earlier question about, is it other things, economics, monopoly, central banks, debt. I actually think still, and another simple metric is that 1.1 quadrillion versus 7 trillion Bitcoin. I think 95% of what has happened with Bitcoin still to this day is the power curve. It's the natural adoption of Bitcoin represented by the price, the natural adoption represented by the price. And that's the best chart that can do it. But of course you can see it, like you said, in the hash rate addresses.
Does the power curve project the tops and the bottoms for timing as well? Or just the levels of the tops and the bottoms?
No, some people have tried to do that, but in it itself, it does not do that. That seems to be a function of the halvings. It seems to be. But some people try to model the halvings around and the price tops and everything. But just simply the curve, simply the way that the adoption of Bitcoin has gone, for every 12.7% increase in the life of Bitcoin, the curve doubles. My view, still to this day, it's evidenced by something like $1.1 quadrillion in bank reserves flowing through the system a year, velocity versus 7 trillion in Bitcoin on chain. My view is we're 95% just growing. We're just growing as we are. 5% economics, money supply, debt, whatever. That will change over time. And like I said, I think we'll get to 50-50 by the year 2043. That's how I view it.
So within the lower bound and upper bound of what I've seen of the power curve, there are oscillations, right? Up and down. On a continuous upward trajectory, but there are oscillations. What do you think drives those perturbations? That's what I'm getting at. It's like, what's driving that? Do you think the halving still plays a part in that?
Yeah, I think that the halving is a natural instigator of the 4-year cycle. There's interest there. There's confusion there. There's new people learning. So you think it's more a cultural thing than a supply-demand element? Because the supply part is it's so minuscule. Right.
Do you think it plays a large cultural factor in determining?
Not the only.
Okay.
I think, it's the madness of crowds, it's markets, everything else. But one has to ask, why is it every 4 years? And that could break. Everybody's talking about it. Like all the Bitcoin treasury company CEOs are talking about it. This is not, we're going to be on a sustainable growth path here. No more bears, this and that. Everybody's talking about it. I myself am not convinced. I'm looking at the numbers. Again, I have the luxury of just we all have the luxury of Bitcoiners being able to watch this stuff, try to figure it out. but also, let the data tell us what's happening. I haven't seen anything to say that this is like, we're now on a new sustainable path. And by the way, what is the path? Is it exponential? Is it linear? Is it going to be a power growth? What is your sustainable path? So to me, the 4-year periods, the 4-year cycles, that idea has not been broken. If it breaks this year, like we, go to some extended upper leg and we sort of stay there, then I would say we need to revisit the idea. But for now.
Yeah. I'd have to go back and have a look exactly which type of money supply and business cycle amalgam that this indicator was looking at. But that tracked more accurately the bottoms and the runs than anything.
There's a lot of these, I'm not a believer in this, by the way. So there's a lot of these M2 US money supply lagging indicators.
Oh, no, that's not what I'm talking about.
Okay.
That's not what I say. I've seen that and I've read the criticisms of it from, my good friend TXMC and other analysts as well. And look, I don't dispute any of that. I'm talking more, like the 15-year cycle of what's been happening with money debasement, or monetary debasement, I should say. M2, money supply, business cycles. Tech Dev is an analyst who has done that quite consistently since I've been following about 3.5 years. And it's I don't know if you know him or you follow him at all, but it's eerily accurate, much more accurate than anything else I've seen relating to on-chain metrics or the halving or anything else. And it matches the peaks and the troughs. At least it marks off where the bull market, the meat of the bull market kicks off.
Right.
Every single time from the earliest days. And we're like, well, maybe it was a money supply all along. And it was only just when the price action slightly misaligned with the halving cycle that we started maybe being open ourselves up to that possibility.
Yeah. I have a chart on this. So again, the monetary base right now is about 26 trillion. It was as high as 30 trillion post-COVID, during the peak of COVID, 30 trillion. Before COVID, it was 20 trillion. So 20 to 30 down to 26. Mind, Bitcoin also, and by the way, when Bitcoin started, the global monetary base was maybe 7 trillion. Okay, 7 trillion. So Bitcoin is in a whole, it is true to say that Bitcoin being born out of the financial crisis and stuff, that is a new financial epoch. The sort of the interest on reserves and the idea of just flooding the economy with reserves when anything goes bad. Yes, they did that to an extent here and there always, but it just went haywire in 2008. So, broad monetary epochs, United States was like silver gold standard, 1800s. It was actually it was bimetallism, which was unfortunate that the founders did that because you get Gresham's law, bad money drives out good. But it was focused on silver at the start of the Republic of the US, eventually by 1900 went fully gold and then just completely broke anyway 14 years later, Federal Reserve. So you had that that was the end, the ultimate peak of the gold standard. The international gold standard was very short. It was like 1870 to 1914 when central banks worldwide agreed on gold. In the modern era, yes, gold is a 6,000-year-old sovereign sort of coinage and stuff like that. But so we had that epoch. Then the Federal Reserve is a famous one. I think that is a good epoch, basically from the Federal Reserve through the dollar exchange standard, through post-World War II. Central banks around the world reserving dollars instead of gold, so on and so forth. Until 1971, de Gaulle recalls the gold, wants it back, devalued the dollar fully, still $42 an ounce on the US's books, but that's statutorily. We have a market rate of, actually going back gangbusters now, 3,300 or 400 per ounce. And then 2028, again, a new monetary epoch. So it is true that Bitcoin is in this monetary epoch itself, which is like started in 2008. But my view still remains about that 95% power curve of network adoption. Because, and this is a topic that Bitcoiners get wrong all the time. They're just not looking at the balance sheet or whatever. The Federal Reserve, as an example, was decreasing the money supply from 2014 to 2019, decreasing. In fact, and when I say it was it means the balance sheet did not grow. That's literally the printing press, the balance sheet, the monetary base. It topped out in mid 2014 and then went sideways to down until 2019. There's a big spike in the repo market, September 2019. It basically just meant all of a sudden people looked around and they needed more reserves than they had. Repo market rate spiked, and it was a sort of a mini crisis, whatever, and they started to print again. So actually, we had an unhealthy increase of the money supply just before COVID, but then COVID just destroyed it all again. The point is, let's just use the 2014 example. From 2014 to 2019, the Federal Reserve itself, money supply was going sideways to down. Bitcoin's price boomed during that period. It went through it did go through a sort of a crypto winter, as they called it, but then it boomed in 2017, then went down again. Right as the money supply was starting to pump up, Bitcoin was going down in 2019. Bitcoin went down in 2020. Money supplies were rocketing up in 2020. So I don't see the correlation yet of the money supply.